heard Mark Harden here.
Yeah. JJ, the CPA is here. Let's go. Yeah. Money. You know what it be. All I do is work, cause money never sleep. You never met a CPA quite like me.
JJ, the CPA here. Hope you're doing well. Thanks for tuning in live, or if you're tuning in later, thanks for that. I appreciate it. I am a practicing CPA. I've been doing this for 30 years. Every day I'm working with clients. Once a week, I'm coming live with you to talk about some of the things that my clients are dealing with. My channel, being a practicing CPA that's licensed here in Oklahoma, is really dedicated to the small business owner and the self-employed. And today, you have tuned into my JJ the CPA's Small Business Toolbox.
The combination to money making, we got this. JJ the CPA is the master locksmith.
All right, we're getting smooth with this, Amanda. I love it. Well done.
Thank you.
Well done. Well, if you tuned in live last Monday, you know that we were taking a day off. Hopefully you were as well. We were on the lake and did somewhat of an impromptu. Didn't have all the graphics, but today I want to walk through with you what self-employed small business owners need to stop doing now. And I thought it would be fun to do this in a top 10 version. So I'm of the age that I grew up with David Letterman, and he always had a top 10 every night. So I'm going to give you that in a top 10 format. And then the rest of the show, I will walk through each one of those in a little bit more of a detail. We try to keep this show under an hour or so. We want to keep it moving along to be hopefully fruitful for you as a small business and self-employed individual. But my goal is that in the beginning of the show, I try to give you all the meat, and then the rest of it is really kind of going through the details. But before we go through the top 10, I want to let you know that for those that pay quarterly estimated tax payments, second quarter is due June 15th of 2022 for tax year 2022. Now, if you're scratching your head on that a little bit, in the body of this video, I've put a link to the IRS website talking about quarterly estimated tax payments. I'll spend a little bit more time later in the show giving you some details related to that. But before we get into the meat, I would like to present to you our top 10 things for self-employed to stop doing now. Boom. We have a little video there. It's all going off without a hitch, babe. You're doing an awesome job. For those of you that don't know, my fiance, Amanda, is my producer. She's behind the scenes, beautiful as can be. But I will be in front of the camera for you today. So we are going to now go through JJ the CPA's Small Business Toolbox, top 10 things that small business owners, the self-employed, need to stop doing now. And I will tell you this, my fellow tax pros, EAs, and CPAs, I think you'll enjoy these and probably agree with each one of them. So let's start with, just like David Letterman would on the Late Show, or I guess it was the Late Show. He wasn't the Late Show.
He was just the Late Show.
Yeah, he's the Late Show. How's the volume on this? I noticed that my mic's over here. I might want to move this mic a little bit more over. See, this is a live show. We're not on CNN. We don't have makeup. Well, we did do a little makeup today, didn't we? We did a little cover up because I've been in the sun, and we had and we got this backwards. That's all right. All right. So now you did do a mic check, but you know what I realized is you did the mic check facing you. Now, for those that are like, just get to the top 10, would you? I'm just here for the meat and potatoes. Let's get into it. So number 10 is stop not taking the home office deduction that's on Schedule C. Number 9, stop not maxing out your retirement. And number 8, stop not deducting business mileage on your personal vehicle starting from your home office. That's key there. Number 7, stop not reporting cash income. So in case you're like, what did he just say? The inverse of that is start reporting your cash income, y'all. Number 6, stop not paying your kids. Number 5, stop discounting your fees, okay? And number 4, stop eating credit card fees when taking credit card from your customers. So when your customers pay you, stop eating that credit card fee. We're going to talk about all of these things in detail. But number 3, stop not raising your prices. And number 2, stop paying employees as Form 1099 independent contractors. You need to pay them as an employee, W-2. We're going to talk about the differences between the two, but you need to stop paying them as 1099 employees. It's really not fair to them, and you as a fellow self-employed that has income that could be subject to self-employment tax, you're putting your employees, that you want to call them, in that same position, and you're throwing a little more tax cost on them. But number 1, and I bet you could guess this, is stop filing Schedule C and start filing Form 1120S for your business, meaning stop being a sole proprietor, filing Schedule C, and start being an S Corp, filing Form 2553 to elect that and be an S Corp. Why? Because then the net income from your small business will not be subject to self-employment tax. How much self-employment tax are you paying? Go to your tax return, look at Schedule SE as in self-employment, and you will see at the bottom line of that form how much you're paying in self-employment taxes. An 1120S S Corp will eliminate that. You bet there's catches. Of course there is. So for my fellow tax pros that maybe tuned in, they're like, well, wait a minute, it's not just that easy. Well, of course not. And really what I'm getting at is you need to hire a professional, if you don't already have one, that can help you with this so that you can save on some of these taxes. So before we kind of get into some of the meat and potatoes of this top 10, I'm not a very good entertainer. What I want you to remember is that I'm a CPA. I'm a certified public accountant, graduated from Abilene Christian University all the way back in 1993. I graduated and turned 21 almost in the same exact time, started my own CPA practice when I was 25. So I've had my own CPA practice since 1997. And bottom line is that I'm advising my clients every day. I'm not doing YouTube videos for a living. I'm not making enough to do a living. I do make a little bit off of YouTube. Thank you so much for that. I appreciate the time and effort that you put in to supporting this channel and this community. But the thing I want you to know here is that I'm trying to put together good information for you, maybe provide a little entertainment value. But Amanda, who is here with us today live at least? We do want to make sure we wish special luck to CSR Card Shop Reality, our great friend who's pretty much number 1 on every time. First up, first time to do thumbs up, great encourager, as well as many others. But he is heading to Las Vegas and told us that he wouldn't be on live today, which normally he is. But who else do we have on with us?
We have with Flying Colors.
Oh, with Flying Colors. How are you doing?
Yes, and we have Rob from Imagine That Toys.
Oh, Rob, how are you? Good to see you.
And we have Jeff from Blue Line Tax and
Ooh,
Accounting.
Jeff.
I know, we haven't seen him in a while.
I know. I think I talked with Jeff all the way back in 2020, maybe for the first time.
Yeah, and we have Greg from Roll Tide.
Ooh, Roll Tide. That's
Roll
right.
Tide.
Oh, Roll Tide. That's right.
And we have Tax Time Forever.
Tax Time Forever. Well, thank you for tuning in.
Yes, and then we have MHE Golf 12. So thank you guys for being on
you
here.
All. Yeah, I appreciate that so much. I appreciate that. I mean, turn the mic. We maybe one day we'll have it to where, some of these big time shows, maybe in retirement, I'll have the headphones on and I'll have a microphone in front of me and we'll have a padded room and then you'll be there and it'll be kind of like these talk shows we see and the camera will pan over to you when you're talking and then it'll pan over to me.
Howard Stern show, wherever Pamela, wasn't that her name?
No,
Was it not?
no, I can't remember her name, but I don't think it was Pamela.
She was over there in the booth.
Yeah, they were kind of one of the first ones that kind of made that famous.
And then I want to give a shout out to Dax, the CPA.
Ooh, Dax the CPA. Yes, thank you so much, Dax. Hope you're doing well. All of these individuals appreciate you so much. I know we interacted a lot in 2020 and in 2021. Hopefully we're all taking a deep breath. Now that we are here about the beginning of June, this is when this is airing. And even if you're watching this in July or August or September or even next year, let's talk about the quarterly estimated tax payments. So go ahead and pop back up that as of right now, for those that are tuning in live, the quarterly estimated tax payments for individuals are due June 15th for 2022. When is third quarter due? And if we had a live audience, I would maybe wait and see if somebody raised their hand, but we don't. But it's September 15th, and it always is September 15th. When is fourth quarter due for individual estimated tax payments at the federal level? It's January 15th. And then that would beg the question of, well, when is first quarter due? And that is actually April 15th. So first quarter for 2022 should have already been paid, if necessary, on April 15th of this year. Now, of course, everybody's going to go, whoa, JJ, the due date wasn't the 15th. You're right. It was actually the 18th. And then if you were in Massachusetts or Maine, I believe it was actually the 19th. Point is that if you're watching this, 5 years from now, or maybe my grandkids are watching this one day, most likely these due dates will be exactly the same because they've been etched in stone ever since we've been doing taxes related to quarterly estimated tax payments. But what is it that I'm talking about? So I'm not talking about payroll taxes. So I'm not talking about Form 941. I'm not talking about when you pay wages to yourself or an employee and you're withholding taxes and paying that. That is not what this is. This is really for anybody, but really it comes into play for the small business owner, especially the self-employed, where the IRS requires that if come tax time, so next April, when we're talking in 2023, April 15th of 2023, if you know that you're going to owe more than $1,000 come then, the IRS then requires of anybody that you pay in your taxes evenly throughout the year. Well, if you're an employee and you have wages, the first opportunity you have, even as somebody that owns an S Corp or a C Corp and they pay themselves wages, they can then withhold taxes, federal and state, if applicable, to pay in towards their individual taxes. And that's really the first line of defense for my clients. So with my clients, we withhold wages, we withhold federal and Oklahoma taxes from their wages. And typically, though, that is going to be enough tax withheld to cover any individual tax related to those wages. Now, I do have some clients, and actually I do this for me as well. I over withhold on some clients, meaning we withhold more tax than what is actually necessary to then either do away with having to pay in quarterly estimated tax payments or not having to pay them in at all. So when you then look at, am I going to owe more than $1,000? Well, if you own an S Corp or a C Corp and you're paying yourself through wages, then you could just increase your withholdings to then avoid that. Well, what happens if you owe more than $1,000 come next April 15th in 2023? See, this is the kind of planning I'm doing with my clients. This is the kind of planning I'm wanting to provide to you. Is we don't wait till next April to know where our clients sit. Already starting at really the beginning of May now, I have already been out with my clients looking at the current year, figuring out what the tax picture is going to look at and what we're looking at come next April. And there's several reasons for that. First, it's a strategy, okay? And the strategy is, well, we don't want a big refund because that means we just gave more money to the IRS than was necessary, and all we're going to do is get money back in April. That's not Yahtzee. It's not winning the lottery. It's just getting your own money back. And it's not that I don't trust the government. It's just that for my clients and my small business owner clients, including me, that money's better going to be used in my pocket, in my bank account for my business, and I want to pay in what I'm required to, but no more and no less. Now, when we are then talking about when you owe more than $1,000 come April 15th, then potentially you're going to be subject to underpayment penalties. Well, what are the underpayment penalties? Well, when you read the IRS and you try and look through what that calculation is, the IRS is very, I'll be honest with you, kind of obscure. And when you really deep down, and so if you were to look at Form 2210, IRS Form 2210, go to the instructions, this is where the underpayment penalty is calculated. And here's where it is in a nutshell, okay? It's in essence, whatever that tax is that you owe above that $1,000, in essence, it is going to be a 1/5 penalty per month. But here's the key. It's not just, well, when did I owe it? And then times 1/5. It's not as simple as just to go, well, it's 5%. The reason that it's a little tricky is that whatever you owed April 15th, which is really 25% of whatever your quarter is, or 25% of your annual taxes, if you didn't pay that in, then your penalty's there and it just clicks all year. You already got the penalty. It's clicking all year. It's not really a way to make up for it. When you hit second quarter, if you haven't then paid in half of your taxes for the year, then your penalty is clicking on that all the way. You can overpay in future quarters, but you're still going to click on penalties for the prior quarter. So it's not a good idea to wait until the end of the year to figure out what you need to pay in, because you don't want to add insult to injury and pay penalties on top of taxes. It's just a waste. So I do have, back in the day, many clients that would come to me and they had the strategy, if you will, of waiting to pay in their taxes. And actually they were waiting until October to pay in their taxes for the prior year. And somehow nobody ever told them that they were now paying also late payment penalties on top of underpayment penalties. So I don't want to get much more in the weeds on this, but here's what I want you to know. You want to avoid all that brain freeze that I just kind of went over with you, then what is your taxes looking at? So when I'm talking with my clients right now, we're doing strategy. Why is it that we're doing strategy? Well, the first is to determine what the year looks like, to determine what April looks like, to determine what needs to get paid in or adjustments to withholdings, whether it's up or down. But more important than that, when I'm dealing with my clients, what we want to look at is, well, what can we do about it, right? So I'll tell you this, there were many clients back in 2020, and when they were shutting down, one of the first things I told really all of my clients is, we are not going to probably pay in first or second quarter estimated tax payments because your business is closed. The other thing I said is, maybe we don't need to withhold taxes temporarily. You can still pay yourself wages. We had the PPP factor into play. But the strategy immediately was, well, let's not pay in more taxes than we need to, because if you're going to owe way less in tax for 2020, by the time we hit tax time in 21, you're going to have a big refund. That's not going to feel good to you to wait now all the way until the following year to have money in your pocket that you otherwise would have had. What I want you to hear here is, refunds are not for winners, okay? It's not lottery time. It's not something we were cruising along when we were with the kiddos this weekend on the lake. And there's some song that's called Tax Season, and it's basically talking about getting a big tax refund. And it's just having fun. And I know it's fun to get a tax refund. But for small business owners and the self-employed, it is not fun. Most of my clients, we break even or they owe, and they owe in a way that they don't have any penalties. But here's what I want you to hear. Here's what I want you to hear. Why do you care about knowing where you stand right now? Because I understand you're busy making money, dealing with customers and employees and vendors and all the other things, not to mention your home life, family life, trying to maybe work out, get some sleep, watch a TV show every once in a while, right? Why do you care about this, and why should you care about it right now or anytime during the year, sooner rather than later? So you know what you can do about it. And I mean this, most small business owners, especially now that I would say we're probably past most of the pandemic. So I'm saying that in a sensitive way. Maybe some are still feeling the effects. Maybe some still have some restrictions where they are. So not all of us are past the pandemic. My point, though, is that since the majority of us maybe are back to recovery, we're kind of back to feeling that balance again, or we're kind of feel like, man, we're kind of having a normal year again, or we can see the light at the end of the tunnel. The point is, most likely for 2022, you're going to have a better year than 21. And you're definitely going to have a better year than 2020 if you definitely had a big effect. And what does that equate to? More taxes. What does that also equate to? money out of your pocket at the wrong time, meaning when it's a big bucket of cold ice water on you come February, March, or April, when you're now having to write a big check to pay in your taxes. It's better to know now. But hear me on this, to then say with your advisors, hey, what else can I do about that? That also then requires that you know where you stand right now. You need to have good financials. You need to know, what is my business netting? How much money am I making? From the standpoint of then being able to not only work with your own numbers to know how profitability is working, but is there anything else I should be doing before year end? And I'm not talking about just spending money to spend money, but is there some things that you could strategically be doing or preparing for? And guess what? Sometimes there's not. Sometimes it's just, well, here's what the tax is going to be. I have some clients that have been practicing themselves, let's say for 30 years like me. And you know what? They've bought all the equipment they're going to buy. They don't need another vehicle. Their kids are well grown. They don't have kids working in their business anymore. They have maxed out their retirement 4 years and they're continuing to max out retirement, and they have enough of everything and they don't have any debt, and they have their business rocking and rolling. They're raising their prices every year. And we're still looking at the numbers. We're still looking at profitability. We're still making sure that we know where they stand, making sure they're paying in appropriately, not too much, not too less. But sometimes it's just, well, it looks like you're doing everything, right? If there's nothing else for us to do, then at least know your number to plan for it, to then not interrupt your cash flow. So then how much do you need to pay in June 15th? And then I'm going to go back to the top 10 and walk through each one of those in the remainder of this. But how do you know how much you need to pay in June 15th? Well, it's not necessarily easy if this year is going to be less than the prior year. Meaning, if you know that your tax is going to be less in 2022 than it is in 2021, then you need to estimate, well, what's my tax going to be for 2022? What's it going to be? And then what is half of that tax? And that's what needs to get paid in by June 15th, either through withholdings or through your quarterly estimated tax payments. So when I say it's not straightforward, it's, well, you got to determine, well, what is your taxable income going to be? What's the net income going to be? To then know that. It's a little easier when you know that 2022 is going to be higher than 2021, because there's a safe harbor. And this applies whether it's for first quarter, second quarter, third, or fourth quarter. So it doesn't matter that you're listening to this in September or August or October or November, or December, or January, because the safe harbor is this. If you know that this year, the current year that you're in and paying quarterly estimated tax payments towards is higher than the prior year, your safe harbor is this: last year's tax. So as a simple example, if last year's tax was $12,000 and you know this year's tax, because your income's up, is going to be more than that. You don't even need to know what it is. It's just like, well, I'm making more. So what am I required to pay in June 15th? Well, what was last year's tax? It was 12 grand. Well, by June 15th, you need to have already paid then in $6,000. So if you didn't pay anything first quarter, then you need to pay 6 grand for June 15th. If you paid 3 grand first quarter, then you pay 3 grand June 15th. You pay 3 grand September 15th and 3 grand when you hit January 15th. And if you've then paid in that $12,000, which is last year's tax, then even if you owe $1 million come April 15th of 2023 for 2022, there will be no underpayment penalty. But that $1 million in this example, you would owe by April 15th of 2023. And if it's not paid by then you start to have late payment penalty, which is the penalty is a full month of 1/5 or 1/5 of a percent. No, what is it? It's 5%. So it's 1%. And it's per month. Okay. Adding on. Right. And it's up to 25% of whatever your tax is. So it grows and grows and grows. And remember, an extension that you file on April 15th, even though it's next year, is not an extension of time to pay. Now you're probably going, JJ, why are you talking about April of 2023? And we're in June, or if you're listening to this in July or later, why are you talking about April of 2023? Because with my clients and with you and with your strategy and with your planning and with your advisors, you should be talking about that right now. This is what I'm talking to my clients about right now. And why? So you know what you can do about it. That's why. Because whether you realize it or not, taxes for most small businesses is the number one expense. You know, I have a friend of mine that told me this, I think back in 2016. He said, you know what everybody's number one charity is? The IRS. Of course, you know, it's a joke. But when you think about it, and if you look at it as a line item in terms of where your money goes, you know, taxes is a big expense line item. So it's not something to take blindly. You don't just sign up for telephone and just go, I don't know, give me 12 lines, just whatever it costs. I guess that's what it'll be. I'll look at it next April and tell me a year from now what it cost me, right? You don't hire an employee and go, I don't know, just pay him something. And, you know, a year from now, we'll figure it out. I guess we would have overpaid by 70 grand or underpaid by 14 grand. No, you take your business seriously, whether it's small or big or medium, whether you have no employees or 3 employees or 10 or 50, you take things seriously when your money's going out the door. This is how you take it seriously. And this is a way that you would look at, are you investing in your time with your advisor to know what you can do about it? What can you do about it? Well, some of the things we're getting ready to go through are some of the things that you can do about it. Some of it's kind of compliance. Now, I do want you to know this. When we go from 10 to 1, we're not going to be able to spend, 5 minutes on each one of these because we will then hit our limit. I'm going to check in real quick, Amanda, anything that I need to know. And that's really kind of an excuse for me to take a drink. Anybody new pop on to note?
We will say hello to Godsdozer.
Oh, Godsdozer's on with us.
Julia Erickson.
All right.
And Talabar Colbert. And
Thank you so much.
Iris Collins.
All right, Iris, thank you for being on. And, when we're reading these names out, it's what it shows in your comments as your name, right? We had somebody tell us when we first started going live, I think we started doing lives almost every day back in, March of 2020. Yeah. For sure, April of 2020. Yeah. And we'd go live every day, sometimes 3, 4, 5 hours answering questions for people. Kind of throughout the pandemic, doing that all really for free. But we had one person in particular was like, don't read my name on air. And it's like, well, you commented, it's right there in the chat. So point is just in case, reason that we're reading out names is that you've commented, and we just appreciate you for being on here today.
And hello to Road Lion.
All right. Good to see you. Appreciate you. So normally, when we were during the pandemic, we would go live Fridays at 4, and we would have a toast. And I would say, hey, grab some water, coffee, a Coke, 7-Up, or something a little stronger. But I did want everybody to know who's been tuning in since then. This is Gatorade. My lovely fiance, Amanda, said, hey, the red is for Gatorade, and here's some water. But it's a virgin Gatorade. It's a virgin Gatorade. Yeah. Yeah. And you can tell I've gotten some sun. We did get to take a little bit of time off, and we got on the lake. We rented a boat. I did price out, should I buy a boat? And I just thought, if I'm going to get out on the boat, what's great about renting a boat is I just walk up to the dock. I pay some money. I'll be honest with you, it's kind of expensive, but I get on the boat. I take it out and I bring it back, and I get on the dock and I go to my car. And it's beautiful and it's wonderful. I don't have to worry about anything related to that. But we were out on Grand Lake over the weekend with Cooper and his girlfriend, and we had a great time. And so, little update for Coop. I'm excited to say that he will be on the mound within a week. Now, not in a game, but my son is a 6'5" lefty pitcher. He graduated from high school in 2021, and he signed to go pitch with Wichita State up in Kansas. That's, if you're not from the area, that's a big baseball dynasty school. It was quite exciting. But in his third to the last game his senior year. Unfortunately, he had a full tear in his ACL and had to have Tommy John surgery. And so he had that almost a year to the date today, which is June 6th. And so it's been a long process. He's worked very, very hard. He ended up staying in Oklahoma, went to Oklahoma State for a year to then recover and put off going to Wichita State. So he'll be on the mound. He's working with a new PT guy that has pitched with the Marlins and the Mariners. And this pitcher retired from the MLB is also a trained PT therapist. And he also is a lefty, and he also had Tommy John surgery. So, oh my gosh, we got Mexican Ironman, and wow. Well, thank you so much. Mexican Ironman has dropped here, 1999, very unexpected. Thank you so much. He says, thank you for everything you've done for our industry. My clients, my practice have benefited greatly from your SBA knowledge, your CPA wisdom, and your commitment to small business. You're a real life tax Captain America. Well, I appreciate that from fellow Mexican Ironman. We became friends on Twitter, and we've done some DMs between that. And we've kind of had a friendship here going a couple of years. I know he's taken my ERTC seminar, which I really appreciate. He did a wonderful promo for that. By the way, if you still haven't gotten the Employee Retention Tax Credit, I've got a link to that in the body of this video. But hey, thank you so much for that. Very generous. Wasn't expecting that. So let's go now through the top 10, and I'm going to try my best, Amanda, because Amanda has scheduled, and I'm man enough to admit this. Okay. Amanda has scheduled for us this evening to have a manicure and a pedicure. Now, for a guy to get a pedicure, guys, okay, there's no nail polish involved. My nails don't get buffed in any way, shape, or form. What they do is soak my feet, clean them up, trim the nails, clean up the cuticles, just like they do with your hands. They don't put any nail polish on. It has nothing to do with beauty. It has to do with hygiene. But here's why I'm doing that, because we'll release some of this probably here in the next month or so. But as you probably know, Amanda and I got engaged January 1st of this year. And tomorrow we are having engagement pictures done. You were kind enough to wait until we got past tax season, gave me a little breather, and then we're getting in with a wonderful photographer that's giving us a nice deal. And I'm excited because we found a really kind of like on the sale rack, because it's like not really maybe for this time of the year, but this pinstripe suit that is awesome. Yeah, we got a super, super good deal on it, but it kind of looks like, you know, movie star level. And as you put it, it looks JJ the CPA.
It looks like JJ the CPA, that's right.
So we're going to have fun with it is my point. We're going to have fun with our engagement pictures. And you have a beautiful pink dress, which, by the way, I found.
You did.
We went shopping together for that as a beautiful, beautiful pink dress. And Amanda has her perfect tan. You've been working on that and got her hair done today. And so we will be ready to do that tomorrow. But okay, enough on that. Let's get back to the meat and potatoes here.
Okay. So
the top 10 things, stop not taking the home office deduction. So this is on Form 8829. You can just look it up. It's on Schedule C. You're not able to take this except on Schedule C. There is a way you can do it on Schedule F. There's not a way you can do it any longer as an employee because they've done away with the miscellaneous itemized deductions subject to the 2%. Now, I know there's going to be a few that's like, well, you can still do home office, put on Schedule 1, and it's for very specific type of those serving in the military and traveling or performing artists, which is extremely rare. But for my fellow tax pros that know the ins and outs, I want you to know that I know there is still that minor exception. But if you have an S Corp, if you have a partnership, if you have a C Corp, you're not going to be able to take the home office deduction. But for those that are filing a Schedule C, which is many of you, take it, okay? And the reason I say that is that it's not a flag. It's not a flag anymore, especially now that the IRS allows you to do what's called a simplified method, which is $5 a square foot up to 300 square feet. Now, you do need to have a place that is your home that you are working in. But, you know, nowadays, most of us, we are working from home in some way, shape, or form or capacity. No, this doesn't mean that your nightstand can become your home office. But they really, when looking at what is your home office, it's what are you doing to work? Where are you working? And what is that square footage? So don't take this as, well, I never work at home, but JJ said that I can use my kitchen table as my home office. Wink, wink. I didn't just say that to you. What I'm saying, though, is that if you're in an apartment and you don't have another room, you know, like you're in a studio apartment. So when I first graduated college, I was in a studio apartment. That was a decent size, you know, it was probably about 800 square feet. And if I was working at home, I didn't, no one did then. But if I was working at home, if there was a dedicated area, even if it was really, well, I clear my kitchen table, I set my computer up on that. How many square feet is that? Plus my sitting area. That's a square footage for a home office if you're using it regularly for your business. So even though I have an office that I go to and work with my employees and with my clients, I also have a home office here. And actually, I meet with clients here every once in a while. And I don't mean just wink, wink. I meet with them like I do. And I have a full engaging office right here. So with that being said, I'm a Schedule C filer for my insurance side. And so I am able to take a little bit of a home office for this here. So take it. Number 9, stop not maxing out your retirement contributions. So I've spent some time in my other live shows talking to you about this. And I put a link on my community page to the IRS talking about the different programs from 401k to the simple plan to the SEP, etc. You need to be maxing it out. It's okay if you're starting out and you can't max it out at that time, but you need to move towards maxing it out. It's still not even enough for you to retire on, whatever the max is. And it is okay that you want to invest back in your company, and it is okay that you want to become debt-free, but you've got to find a balance. And it does mean that you also need to be setting aside money for yourself in retirement, period. And it can't just be then the minimum. It needs to be almost, in essence, that's coming first, because you need to save over time. Number 8 was stop not deducting business mileage on your personal vehicle starting from your home office. Now, this is not a wink, wink, or smirk when I'm telling you this, okay? So my point is this. I have a home office. I'm giving you an example here, okay? I have a home office, right? So when I work here, probably more than I work at my other office, okay? This has really become, without a wink, wink, my primary office here in my house. So when I leave my house and I go to a client, that is not a commute. And I already know there's going to be some tax pros, and I'm going to say, hold your tongue for a second. They're going to say, whoa, 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 that's commute. It's not, okay? You're just dead wrong, okay? With all due respect. When you have a home office and you've established it as such, and you're using it routinely and regularly and properly, then your mileage starts from your office. This isn't a manipulation of the law. This isn't an opinion. So when you look at the IRS rule related to this, there are rules that are 2 rules. One is related to employees, okay? Employees. When you are self-employed and you're filing Schedule C, you are not an employee, period. You can call yourself an employee. You can say, well, I pay myself payroll every 2 weeks. You don't. It's not possible when you're filing a Schedule C. Cannot, okay? So I'm talking about Schedule C filers here, okay? When you're working from home or you have a home office routinely, that is your first office. Now, there are rules for employees, okay, fellow tax pros. And employees, if they're driving from home to the office, that is a commute. You're right. But when you're self-employed, Schedule C, you're not an employee. You don't look at those rules. You look at the rules. So when you look at the publication related to this, I think it's publication 463, go to IRS and put in mileage and and you go to it and you look at this and you're going to find it. And I've been through 2 IRS audits and have won. And that is this. Your mileage starts from your house. So you need to recalculate. Now, again, this is on a vehicle that you're not taking actual expenses on. It's not on a vehicle that's a corporate vehicle. It's not on a vehicle that you're depreciating. This would be on a vehicle that's personally yours, and you're using it for business. And now we're talking about business mileage, but there's not that commute. Now, what if you're self-employed and you don't work from home and you just have an office? Well, then, yeah, you have a commute from home to your office. So the difference in the rule then is more about your home office. So when my clients have a home office, I really make sure they have a home office. And if we are then looking at mileage, then we are starting mileage from the home. Ooh, I can't believe JJ just said that. Well, anybody that works for the IRS, if you're watching this and you're like, wow, now we want to look at JJ's clients and we're going to go audit them, because for some old cronies that don't tune into this channel, but see, I travel around the country talking to fellow CPAs, EAs, and tax pros, doing tax seminars. I travel. Amanda and I now probably been to over 70 cities, and most of that before the pandemic. And I have those tax pros that come up to me after, and they're like, you're looking to get audited. And they usually talk like that, and it's mostly older guys, just going to be honest with you. Well, you're going to get audited, talking like that and telling your clients to do all that. Well, here's the key here, okay? You can't listen to a YouTube channel and then go off half-cocked and do stuff. You got to have a professional working with you. And you need to have a professional that's going to work with you, that's going to ask you questions, not just say, well, that's an audit flag. I don't ever tell my clients that. I never use that language, because there is not an audit flag if you're doing it correctly. And if you get audited and you're doing it correctly, you're not going to have an adjustment, okay? A tax professional that's scared of an audit, oh my gosh, you're going to get audited, is a tax professional that doesn't know what they're doing. They don't know how to explain it, or in essence, they're lazy. No offense. So I'm being serious. You have a tax advisor and they say, well, I can't do that. Then go ask them why. And if their reasoning is audit flag, get out. Go find somebody else that does not use that language. Because if my client comes to me and they say, hey, I just bought a boat. So I get this asked several times a year. Hey, I just bought a boat. Any way we can write that off? So you know what I say? Well, are you going to rent it out? Well, no. Are you going to like commercially tag it? And are you going to put it in a service kind of like an Airbnb? And will people be able to rent it out? No. Are you ever going to take clients on it with you, like in a regular basis, like maybe 3-4 times a week? Are you going to take clients out with it? No. Are you going to put like maybe the business on the side of it? No. Are you going to race it professionally? No. Are you going to hire someone to captain it and take your clients out and maybe turn it into, on the weekends, it does cruises and dinner shows? No. Okay. Are you going to do anything related to business with it? No. Well, then no, you can't write it off. See, a tax professional that says, no, you can't write a boat off. Pause. And so for my fellow tax professionals, if you are saying that, maybe you should. Now, here's the difference. And my grandfather, who was a CPA, Omar Abbott Slater CPA, is no longer with us. I didn't grow up with him, but he was definitely a hero of mine. He had a practice in California. And one of the things that he told me is that the key to working with your clients is to have a relationship that they'll call you in advance, talk to you about things, ask them questions, see if there is a way to write something off. But if not, then to explain to them why. And to not tell them it's an IRS flag, because that's not a real reason. It's a lazy reason. So with my client then that says, because I've heard it, right? You know, we're out on the golf course and they're like, well, what if I did rent it out? Okay, but I mean, are you actually going to rent it out? Well, no, but what if I did? Well, if you're going to rent it out, then you would need commercial insurance. You would need to have a service. I'm assuming you would have insurance to cover it in a contract. So are you going to do all that? Well, maybe I will. Okay, well, then let's talk about how then maybe some of that actually could be a write-off. Now, I'll tell you this. I have a client that came to me, and when I started asking the questions, they said, yes, I'm doing all of that. Yes, I'm doing all that. And they're buying a boat. It's down in Florida, and they're only going to use it 1 week out of the year, and the rest of it will be legitimately rented out through a service. It's going to have captains professionally that are hired. There's a service that's going to find vendors. It's all legit, above board in every way that you could possibly imagine. And that would then yield a write-off related to that, because now that's the business of owning and renting a boat, just the same as you would be owning and renting a house. All right, let's go to number 7. Stop not reporting cash income. Doi, this should be doi, doi, doi. Right. But I'm telling you, I mean, it's amazing to me. Now, I don't hear it anymore because I stopped really taking on clients back in 2018. I've only taken on 2 clients since then. And what's amazing to me is back in the day, just put it that way, that I would have, every level of income, every level of sophistication, be like, hey, you know what? I have clients that pay me in cash. Do I need to report that? I'm like, do you want to go to jail? Well, no. Well, then you need to report it. See, the thing is that not reporting income is fraud. There's no way to get out of that. There's zero excuse for, oh, I didn't report income. So it doesn't matter what form you got it, whether it's Bitcoin, gold, trade, cash, furs, clothing, real estate, or checks and credit cards. When you get something in exchange for business services or anything really that you're getting, that's going to be some form of income. So cash, yes. But let me tell you an example of this is that I had back in 1998, I remember it very specifically. So I started my practice in 97. So in 98, this was my first tax season. That's why I remember this. And this family came in. They had 3 kids. One of them was in a stroller. And the wife and the husband came in, and they had just started a business. And they came to me, and we were filing a Schedule C. I was talking about them probably needing to file an S Corp. But when we were going through their information, they had come up with kind of a handwritten P&L. I asked them, I said, well, when did you start your business? How long? And I kind of was like, it seems like you have too much of a loss here, though. I mean, and just from the standpoint of what you're telling me and what you're charging, it's kind of not adding up. So I just want to make sure, are we reporting all the income? And the wife slapped the husband on the leg and said, that's not the right income. Now, hear me on this, because this isn't really what you think that's going to end in this story. They said, that's not the right income. And he's like, well, I didn't put down what we collected in cash. The income that I put there was only what I collected in Form 1099s. I thought that's all I had to report. And I said, no. It doesn't matter what you get in Form 1099s, okay? You got to report all your income. So you need to report it. And he's like, okay, well, here's my total income. So I would call it innocent. But here's what happened. They went from a loss that would have done nothing for them, meaning they wouldn't have gotten anything back. They didn't pay any money in, okay? But by reporting the cash income, they then showed around $24,000 net income, and having 3 kids, married, filing jointly, and being young, they then qualified for the earned income tax credit. And I don't remember the exact amount, but I know that it was well over, I want to say $3,000 or $4,000 of earned income tax credit. So my point is that here's an example of where it helped you. Now, the other part is that those that don't report all their income, yes, it's fraud, but it hurts you when you go get a loan. It hurts you in so many other ways when you're not reporting your right amount of income, because banks and third parties, those that are going to do business with you, your tax return is what they're going to rely on, and it needs to show the right amount of income. All right, number 6, stop not paying your kids. So if your kids are working in your business, pay them. There's nothing wrong with paying them $20 an hour, okay? Let's just move on. Number 5, stop discounting. Just stop doing it. Do I really need to keep going on about this? Stop discounting. Stop it. Stop it. Stop it. Stop it. Right? Well, I want that customer. Why? Why do you want that customer? So you can go home and like, oh, I worked on 9 customers today and made the same as if I would have had 8. No. What you need to do is respect what you're doing, respect your price, and clients that don't respect it, don't take them on as a client. But here's the other reason not to discount, is that when they then refer people to you, they're going to expect a discount. And now all you've done is sell everything at a discount. So unless you're just simply a discount provider and you're automatically always grossing up your price to discount it to the real price, that is not something that you would want to be doing. All right, number 4, stop eating credit card fees when taking credit card from customers. So this was interesting. Amanda, do you remember we were traveling and we stopped somewhere and we bought a couple of t-shirts, and when we were checking out, they said, hey, if you are going to use credit card, you have to check this box, but there's going to be like a 2% added.
Yeah.
And I was like, okay. And it was like 90 cents or
Right.
something.
Yeah.
And I'm seeing that more commonplace.
Yeah.
I'm seeing that more commonplace. I actually have a client I was having lunch with last week, a massive company. Like this is a huge company that has huge customers and nationwide. Okay. So this is a family business that I've been working with for a long time. And they said, you know what? We got to stop eating these credit card fees. Because last year we spent I want to say it was around like $60,000 in credit card fees. And I'm not talking about their fees to their credit cards that they swipe on. I'm talking about when customers pay them. And it's getting much more popular even for large companies to pay with credit card. So they told their customers, hey, effective July 1, you can pay with credit card, but we're going to add whatever our fee is. And our fee is 2.5%. So you're going to have to pay 2.5% on above it. So I actually have shared that with a law firm that afternoon after having lunch with these two brothers that own a wonderful business. And that law firm was like, you know what? We need to start doing that. So stop eating that. Consider it. If your clients want to use credit cards to their convenience, don't see it anymore to your convenience. And when I hear from customers and they say, well, I want, though, to take credit card because I get paid faster. You need to just get paid. You need to get paid fast. It shouldn't be, well, I'm willing now to eat 2.5% or 3% so I can get paid faster. And if you are willing to eat it, then you need to, another reason to not discount, you need to then increase your fees by 3%. You know, I just got a letter from the person that cleans our pool every week. And it's pretty darn expensive. So Johnny with Renaissance Pools here in Oklahoma, super fair guy. He's always cleaned my pool ever since I got it. And hopefully you don't take it as, man, he's bragging, talking about he has a pool. I have a pool. Okay. I work hard, came from nothing, lived in a tent when I was little. I came from nothing. I've worked hard. I have a pool. Okay. Bottom line is that the person who's caring for my pool used to charge $25 a week. I actually called Johnny. I was like, are you charging me enough? It's like, yeah. Point is last year at the beginning of the year, he sent a letter and said, hey, I'm going to have to raise it up to 40. I think before it was at like 35. Well, I just got a letter from a week ago and then he's raising it up to 50 a week. And one of the other things that he said in his letter is, it doesn't matter how many times I come a week. It's just now going to have to be $50 each time I come. Because before he would charge $50, but if he came twice a week, it would be 50 the first time and then 40 or whatever. And he's just like, it just takes the same amount of time and effort. So I called Johnny. He's not even a client. And I said, man, great letter. Glad you're doing it. So not discounting. And he also added in the letter that if you want to pay by credit card, we're also now implementing that there'll be a 3% add-on to cover the credit card fee. And I said, bravo to that. Bravo to that. Because the small businesses, they need to make money, period. And if you're going to lose a customer over it, lose them. Because now you've made room for a new customer that's going to pay that. Number 3, stop not raising your prices. So I gave the example of Johnny, pretty well covers that. Number 2, stop paying your employees as Form 1099 independent contractors. Now, don't take this as a scolding, okay? Because I don't scold my clients, okay? Now, sometimes I have fun with my clients. I'll throw them out a window, and say, take that. Like, you're not doing that. Of course, I'm having fun with you. Now, there are times that I get aggressive with my clients and I'm like, no, but these are clients I've been dealing with for 20, 25 years. I mean, they're friends. Like, we knew each other before we had kids and I'm helping to save their business. And I'm like, you're not closing your, whatever. My point is, this is not, though, an area that I scold my clients on. Okay. But it's an area that I don't let my clients anymore, for lack of a better word, cheat on or, do improperly. And the reason I know a lot about this is that when I first started my practice 25 years ago, so, as I told you in the beginning, I'm a practicing CPA. I do this every day. I'm advising clients every day. I had client interactions today. It'll be tomorrow, all week. I'm working with clients all the time. So these issues I'm talking to you about, I didn't read about them. I didn't prepare. This is all the notes I had, and I made them probably 10 minutes before we started. I don't have to spend 7 hours researching all of this stuff. I just know it. The only reason I'm saying this is that to tell you that I'm advising my clients of the same things I'm sharing with you. That's all. That's why I can just do this with it, just like my fellow tax pros on these same issues. But stop paying your employees as Form 1099 independent contractors. First and foremost, if you're calling somebody an employee, then they're an employee. Okay. You kind of already shot yourself in the foot here. And so we did see this a lot during the pandemic and when PPP was coming out. And a big question was, well, how do I get PPP on my 1099 employees? There's no such thing. It does not exist, a 1099 employee. Now, the first thing I'm going to tell you is that if you do pay an employee, but you don't pay them a W-2 wage, meaning you're not withholding taxes, you're not matching taxes, as in Social Security and Medicare, those payroll taxes, and you're just sending them a straight check and you're sending them a Form 1099 at year end, maybe you know this, maybe you don't, but starting last year, so in 2021, for year 2020, you would file then a Form 1099 NEC for non-employee compensation. So they changed it up. The Form 1099 miscellaneous no longer includes the non-employee compensation box 7. They have a special form for it. Now, the number one reason, if you are really looking at the technical, is that it has a different due date. Form 1099 NEC is due January 31st to report what was paid to independent contractors in the prior year. But here's what I want you to hear, fellow small business owners, and this might even help some of my fellow tax pros when they're talking to some of their clients that are like, I'm not doing it. I'm just not going to do it. That's a $5,000 penalty per employee when you send a Form 1099 NEC improperly. So you send a Form 1099 NEC to somebody that the IRS later determines to be an employee. It's a $5,000 flat, non-abatable, oh gosh, gee golly, nope, can't get out of it, $5,000 penalty per 1099 NEC sent out inappropriately. It was another reason, in my opinion, why they broke that out. Where's that penalty come from? It's actually a civil penalty. Look to California court cases, and the IRS implemented $5,000 penalties related to this. Where does it say that? Because I've been told this after seminar. Where does it say that? What do you mean, where does it say that? You should just do it properly and go do your own research, okay? You go find it. Look it up. It's pretty easy. It's called Google, okay? I'm not going to do your job for you. So my point in saying that is do it properly. There's no $5,000 penalty. There is a $5,000 penalty, okay? I present on behalf of one of the most I have my own CPE company. I do provide CPE. You can go to my link to see my CPE. But I also have presented in the past for a national company that has been around for eons, and they're the best. They're phenomenal. And I would say get CPE from them and maybe a few hours from me. And I got that information from them. It's from their presentation materials, and they have the research in the background. So if you want that, go take a Surgeon course, okay? But I'm telling you, it's $5,000 penalty, right? Well, catch me if they can. Well, they will, because the IRS is honing in on these Form 1099 NECs. Now, let's say you're not afraid of the penalty, right? If you have somebody that is working for you routinely, they kind of fall in the category of employee. If you have somebody that you're really pretty much controlling what they're doing for you, how they're doing it for you, they're pretty much an employee. It really kind of comes down to control. Now, there's a Form SS8, okay? SS, as in Sam, right? Form SS8. Just go to the IRS and Google SS8, okay? And you will see there what the IRS uses to determine if someone's an employee or not. But here's what I want you to know. You know how you're going to get caught? You know how you're going to get nailed on this? And I know it from firsthand experience because I nailed those that were sending 1099s to my clients improperly, is those that you send a Form 1099 to inappropriately or incorrectly when they're really an employee, they file a Form SS8 with the IRS, and they tell the IRS, here is my circumstance. And they tell the IRS, here's what I did, here's how I did it, here's how they paid me, here's what they controlled or didn't control. There's a number of questions, and they submit it to the IRS. Then the IRS knocks on your door, which is just sending you a letter, and it now generates an inquiry Okay. There's no reason to pee down your leg over it. It's an inquiry. You're not going to jail, but you are going to get an inquiry. Okay. And IRS is going to go, can you tell us how this person is an independent contractor? And now you got to make your argument. Maybe you prevail. But I do know this. I have 2 clients in the last 4 years that they were nannies, and those that they were nannying for, they got a 1099 from that household. And we challenged it to the IRS, and the IRS saw it our way. Okay. They were not an independent contractor. So what do you risk though, really? Forget the penalty well, catch me if you can. What you risk here is not treating those that you do business with properly. Okay. So if you have somebody that's working for you routinely, they're providing a good service to you or good product, right? Then you need to treat them as an employee in the sense that you're giving them a wage, you're withholding taxes, and you're matching properly by the law, the Social Security and Medicare. Because here's what it comes down to. This person that you love, and you're like, oh, they're my 1099 employee, and I would do anything for them, except I am not going to pay them as an employee. I'm not going to have that expense. Okay. First of all, it's 7.65%. Okay. Give it up. You should be successful enough to do business properly, number one. But the other part of this is that when you pay somebody a Form 1099 and they are really an employee, they have to then report this income on Schedule C, or even if they don't, they have to pay self-employment tax on it. What's that mean? They have to pay 15.3% in taxes on that. And if you say, well, it's not my problem, then you shouldn't really do business with that person. And they really shouldn't do business with you. This is how I talk to my clients. What it comes down to is if somebody's an employee, guess what? Don't you actually really want to control and protect what it is they're working on? Because when you make someone an independent contractor, you're not protecting. I don't care who your lawyer is and what you had them sign. It's not the same as if they are working for you as an employee, as in you protecting the information, the product. There are certain rules in my industry when you're working with an independent contractor versus an employee when they're doing work on taxes. There are different rules related to that. So you're protecting yourself. Also, you're allowing yourself to then get work comp insurance, even if you can get work comp insurance on independent contractors. But you're better protecting yourself, believe it or not. You're better protecting those that are working with you. Now, if you have somebody that they come in once a month and you're just like, when can you come? And they come and do something, that's an independent contractor. If you have somebody like, well, they routinely come and clean my office once a week. Well, do they dictate when they come? Do they dictate the time? They bring their own supplies? That's not someone routinely doing something for you. Do they do that for other people? Probably. But if you have somebody working for you and it's like they only really do what they do for a living for you, that's pretty much going to be an employee. Now, if they're making little fish hooks and selling them to your company, that might be different. But if you're providing all the supplies and saying, well, I need you to work 9 to 5 tomorrow. My point is if you're really kind of controlling them, you need to stop paying them as an independent contractor on a Form 1099, and you need to pay them as an employee. And if you have a tax advisor that has trouble talking this through with you, then you need to get a new one. Because a good tax advisor will help you determine, are they an independent contractor or not? And a good tax advisor is going to say, well, they're an employee. And a good business person, in my opinion, then goes, well, then we need to pay them as an employee. And you are a good business person. That's why you're even listening. So know this. If you're routinely listening to my channel, you're already there. You're in. You're going to heaven. Number one, and we're closing with this, is stop filing Schedule C and start filing Form 1120S for your business. So if you want to know more information about that, go back to my previous lives. My very first one, I talk about this. So just go to the section of my channel. At the top, you'll see videos, community, lives. Click on that. And you will then see where I spent a lot of time. Why should you be an S Corp and not filing a Schedule C? I talked about it last week. I talked about it in the previous week. It's a big theme in my other live shows. But why do you want to stop filing a Schedule C and file a Form 1120S so that your net income is not subject to self-employment tax? What is that? It's a 15.3% tax automatically added to whatever your net income is. No matter what, you don't have any choice on it. Number two, the other aspect is To become an S Corp, okay, you file a Form 2553. Well, how do I do that? Don't do it alone. Okay, you can go to IRS, go and fill out Form 2553. I know there's a lot of DIYs, do-it-yourselfers. This is probably really something you get in this realm. It's time to get a tax professional. Go to your Form 1040. Look at the detailed supporting schedules, and you're going to find a Schedule SE as in self-employment. Look at what that number is. Becoming an S Corp is going to save you that. Now, you will potentially have to pay yourself some wages, so you're going to have some payroll costs. That's where some of the complication comes in. But I'm telling you right now, if you are paying more than $3,000 in self-employment taxes, then what I'd like you to do on a nightly basis is when you get home, okay, before you actually get out of your car, I want you to open the door, put your hand, maybe your whole arm outside of it, and I want you to close your door as hard as you can on your arm before you go in the house, because that's all you're doing to yourself. You're overpaying taxes that potentially you don't need to pay. There's a proper way to do it all. Get a tax advisor so that you can properly do that. Amanda, we have an appointment to get to, and Amanda has been very patient. We are luckily 5 minutes away, and where we're going is some wonderful clients of ours that are going to be taking some special care of us tonight. We're going to probably walk in and have a nice adult beverage while we're relaxing and enjoying this. And we're thinking, I don't know if you remember this, but we are thinking about seeing Top Gun maybe tonight if we could. I've heard it's really good. Top Gun Maverick. All right, y'all. Well, I'm going to sign off. Thank you for tuning in. If you made it to here, I love you. I appreciate you. Even if you didn't make it to here, I love you and I appreciate you. Know this, as a practicing CPA, everything I'm visiting with you about, I'm having fun with you. I'm trying to give you the best information that I can. If you haven't subscribed to my YouTube channel, I'd be surprised if you made it to here and you haven't, but gosh, I would love it if you would. And then check out my other videos. And then don't you ever forget, you've never met a CPA quite like me. Y'all have a great one. American CPA.